Nigeria's leading institution, Zenith Bank, has announced an impressive 2019 full-year report with profit after tax of 208 billion naira. It's the first Nigerian bank to cross the 200 billion mark as far as profit after tax is concerned. According to the bank's audited financial results for the 2019 financial year, profit rose by 8% as against what was recorded in the previous year. This growth was driven by the 29% increase in non-interest income. Joining us now is Arise business analyst Chika Mbonu for more on the numbers. You're welcome, Chika. Thank you so much for joining us on the Global Business Report. So, is Zenith officially a market leader in the Tier 1 space or in the whole banking space? What do these numbers tell us?
Okay, let me put some perspective to this.
Please.
The first thing is that we are entering what I call the earnings seasons for the banks. Do recall that the quoted companies were given to some media unaudited within 30 days or audited within 60 days. Zenith is one of those banks that chose to submit their audited account within 60 days of the year end. So this is the first audited account of the numerous banks we have in Nigeria to look at, and that's Zenith Bank. I hear you, whether they're the market leader. These are early days, because we need to focus more on the top five banks. And Zenith is the first one that has released the result. But impressive though, very impressive. Gross earnings, came in at 662 billion, a growth of about 5% over the previous year, driven principally by the growth in the net interest income by about 29%. If you look at the report, you'll find that the net interest income fell by 10%. Not surprising though, because one of the challenges they faced last year in repricing the assets. Do recall that the opportunities for banks hitherto on fixed interest income assets are reducing, whereas Zenith Bank works very hard to reduce their cost of deposits. Their asset prices were reduced, and that led to a reduction in the net interest margin. Not surprising though that the net interest income fell by the 10%. So the major growth you find therefore is on the non-interest income line, which grew by 29%, driven principally by the more than 100% growth in the electronic banking fees. Electronic banking fees doubled to more than 40 billion. So you will find that line again has been a savior for most banks in Nigeria. Whereas they lose in the net interest income line, the non-interest income line, they don't compensate for it. Zenith held its fees and expenses very low, almost at the same level. Indeed, they improved, and therefore, their profit before tax grew by the 5% they have there, and managed the taxes well to grow by 8%. So, top line growth of about gross earnings of about 5%, and bottom line growth of profit before tax of about 5%. You can see they had the interest income, the expenses very, very well. Let's move to the balance sheet. The balance sheet is an interesting aspect. Now, the first thing they look at is the customer deposits. You look at customer deposits, which triggers, sometimes it gives you an idea of how big the bank is, how receptive the bank is from the customers. You find in this case, Zenith grew their customer deposit by about 15%. On the back of that, therefore, they grew their gross loans by about 22%. Do you recall, again, that during the year, Central Bank was pushing for banks to grow their loans. So not surprising that Zenith Bank grew their total loans by 22%. And all that led to their total assets growing by 7%. Now, let me look at one more thing, which is the ratios. The ratios. Now, size is important. Size is important. Indeed, when you classify banks, you try to look at what's the largest bank in total assets. But the issue is that, what do you do with these assets? What do you do with assets? And then what's the size in total equity? It tries to measure the efficiency of banks. The first ratio we look at is return on equity. For Zenith Bank, it came in at 3.8%, just almost flat from last year. Now, this means that if an investor gives Zenith Bank 100 naira at the beginning of the year, how much will they return to the investor at the end of the year? They return to the investor about 23.8 naira. The other one also is the return on assets. They came in at 3.4%, from 3.3 last year. Again, the size of the bank, how are they sweating it? How much money are they making from the size of the bank? It's not just to be big. So this says for each 100 naira asset they have, they're making about 3.4 naira. Now, one of the important ratios in the bank is what they call the cost to income ratio. It says for every 100 naira that you earn, how much do you spend to make it?
Yeah, what's the cost?
Zenith, yeah, what the cost of that? Zenith came in last year. They did 49.3 kobo, 49.3 naira. Now they came in and marginally moderated a little to 48.8 naira.
Okay.
So on all the parameters, statutory ratios, capital adequacy ratio, Zenith came in very well.
Okay. One
other ratio that's very important is the MPL.
Yes.
MPL.
Non-performing
loans ratio.
Yes.
Very important ratio. It talks about the portfolio, how much of it is bad. In Nigeria, Central Bank of Nigeria has given banks that your NPA should not be more than 5%.
Yes.
Zenith came in here at 4.30. Indeed, they did very well by pushing it down from 4.98 last year to 4.330 this year.
Right.
So Zenith has done that. So on all parameters, they have done very well. Size, they have grown in size. Profitability, they have grown in profitability. Indeed, they have become the first bank in Nigeria to cross the 200 billion naira profit after tax threshold. And so, very good result for them, considering the headwinds that banks faced in the year 2019.
Speaking of headwinds, I'm glad you mentioned that. What about the less obvious issues that tend to plague banks, like the environments that we're in, the regulatory environment, and how tough things tend to be? How would you say they have fared? Well,
I mean, one of the first things you look at there is, let's look at the first thing you look at there is, how have the CBN policies affected them?
Yes.
The first thing, let's look at the net interest margin. You will find that in the report that we put out now, the net interest margin fell by 10%, simply because of the fact that whereas the cost of deposit moderated at about 3%, now what happened is that they have not been able to reprice. They have to reprice the assets downwards. So the opportunity to mark up price on asset didn't occur.
Right.
So the first thing, so it affected the net interest income,
yes.
And that's why you see that fall. Now, the other thing that happened during the year was the loan-to-deposit ratio was pushed up. Indeed, for the bank, for the bank of Zenith, about 68.6%.
Yes.
So what you see now is that when the loans grow that way, there's a fear that commensurately the non-performing loans will increase.
Exactly.
However, for Zenith for this season, it actually came down. But let's not rejoice yet.
Right.
Because of the fact that it is not when you book the loans that the loans go bad.
Right.
These loans that were booked in quantum this period in all the banks in Nigeria, let's give it about 24 to 48 months.
Well, when they mature and
let's see what will happen. It is then that we see the result of these activist policies by CBN enforcing banks to increase their lending.
Now, but are you worried because with the central bank wanting to push loan to deposit ratios going up, and as you've just said, this is pretty good as far as staying under the threshold of 5%. But going forward for full year, and it's still far. I mean, this is February, so we still have the whole of 2020 to go. Are you worried that for not just Zenith, for not the banking industry as a whole, are you worried that this NPL ratio figure can climb? Because they are pushing out more loans to go out.
The macroeconomic environment is weak.
Yes.
I mean, it's not debatable. It's very weak. Indeed, for 2020, you do recall that I think the IMF has moderated our growth from 2.5% to 2%.
2% down.
Now, all the parameters that normally will support growth, none of them is like, they're ticking up. Unemployment is struggling. Per capita income, you can see struggling. Yes. So I see the environment is hostile to lending. But let's see. Hopefully, in 48 months' time, will not be crying, even though CBN is celebrating now the quantum growth in the loan portfolio in the banks.
I like your optimism. Where was that other first chart on profits? I wanted to ask you about so as far as non-interest income pushing up their numbers, of which it was fees, yes, electronic fees. Now, as far as the central bank, they reduced, ATM fees came down, transfers came down.
Non-interest income grew by 29% here.
It grew by 29%. Now, well, of course, this was later on in the year.
It's effective from January 1.
Right, okay, so here we are. So non-interest, exactly. So what I want to get your thoughts on is whether you think, again, for 2020, this number, possibly not just for Zenith, for the environment, will possibly come down.
Yeah, I spoke to some chief finance officers of some top banks, and they told me that on the immediacy, the CBN policies on new charges, reduction in charges, will affect their electronic banking fees up to 25. Some said between 20 and 30%.
Okay,
it's going to fall, but they say that also they hope that the net will be expanded. More customers will come into the net, and in that way, the volume will make up for the loss in the near. But clearly, for example, you'll see that this Zenith growth in 29% in non-interest income,
yes,
it is driven principally by the more than 100% growth in the electronic banking fees.
Yes.
So that area will be touched by the new CBN policy.
Okay, in fact, you know what? Let me even ask if the flip side of that question now. So we've looked at the fees coming out, but on the other hand, with more people going towards technology and more people doing more transfers electronically, in fact, basically with the industry going more towards tech. So I've just asked you whether this can actually come down now with CBN reducing fees. On the other side, could this actually increase with more people going towards...
That's what I said, that the volume, they hope that the volume growth will compensate for the loss in the quantum, the amount. Yes, they believe that. Yes.
Okay, I also want to ask about for some of these banks, the portfolio, the loan portfolio to the oil and gas industry. I was just talking in our previous segments with the head of the Lagos Chamber, LCCI. As far as the oil and gas is concerned, are you worried about the share of their loan book that is being head out to the oil and gas industry? Does that worry with where oil prices are and everything that's going on?
Let me tell you what happened. You know, at the time, the oil prices were hanging at $100 above the barrel.
2014.
So many of the banks did their worst case scenario. Some of them did it at $70 per barrel. Some did it at $60 per barrel. And just, or some even did it, let's say, was $50 per barrel. And just said, if the worst came to worst, they'll start losing money when it comes to $50 per barrel. But remember what happened?
Right.
It came down to what? $30 per barrel. And so many fingers were burnt. And you know the oil and gas value chain. You have the upstream there.
Yes.
You have the upstream there. Yes. And then you have the service providers there, the midstream and then the oil service companies. Now what happens if the upstream is hot? They can't pay all the people in the value chain, including the oil service companies. So many of the loans booked by the banks in the oil and gas value chain went bad and struggled because of the fall in oil prices. Now oil prices are hanging at what? 54, 55, 58 dollars per barrel. The hope and the wish is that it doesn't come down lower. Because it is only when it comes down lower that we'll have the same kind of problem we had when oil prices fell to $30 per barrel and it affected the loan books of the banks.
Mr. Chika Mbonu, thank you so much for joining us.